Soundhound AI might have crashed 18% on Friday, but as you can see, over the past month, the stock is up 255%. The last week, the stock was up already 53.55% despite the 18.6% drop after the company reported its latest earnings report. Now in this video, I want to go over a couple of key points that were mentioned during the earnings call, especially the part where I had no answers to give you in my last video about Soundhound AI, going over their earnings report, more specifically about the backlog metrics. So we're going to talk about that, as well as the acquisition of Sync 3. So stay tuned for that. First of all, let me just show you a quick recap. Soundhound AI, one share will cost you just over $6. It now has a market cap of $1.59 billion. And if we look at EV to sales in the next 12 months, that now sits at 23.1 times. Of course, much lower, well, a bit lower than where we were just a few days ago. But previously at the start of the year, you could see EV to sales was much closer to 7 times. Now, if we look at the analyst estimates for the coming fiscal years, you can see a small uptick from the number we've seen in the past video. For fiscal year 2024, we now sit close to $70 million, which is exactly the midpoint guidance that the company gave us. And for fiscal year 2025, we are sitting just over $100 million at $102.75 million, which is also around that number that the company provided for outlook in fiscal year 2025. Now, one interesting point I want to point out is that despite the stock being down 18.6%, despite the company reporting a small double miss, shall I say, we can see that the average price target now sits a bit higher than where we were before. Of course, there are not really many analysts covering this company. Right now, just 6 analysts, 1 with a strong buy, 5 with a buy rating. Average price target sits at $6.38. Upside here, 5.75%. So yes, it does happen. It does happen where a company reports earnings, stock crashes, and yet the analysts upgrade their own price target. They see positive momentum continuing for this company. A lot of you have commented positive things despite the stock taking a hit. You all acknowledge that the stock is already up quite a lot this year, so a pullback was nothing to be afraid of. Analysts here are projecting the same thing: continued innovation, continued execution by the company, and then eventually valuation will catch up, because still today, the company, despite its huge growth rates, still today it is quite expensive. Now, before continuing, if you enjoy this type of videos, leave it a thumbs up, subscribe if not, we really appreciate that. For support me even further, do check out the link down in the description and in the pinned comment to get a top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thank you very much. So I want to start off going over this right here. So they gave us a new metric in this report: combined cumulative subscription and bookings backlog of $661 million represent a 2x increase year over year. Now, I told you I didn't quite understand this metric because the previous metric did not include subscriptions. Now, one lovely viewer did comment and provided a bit more context. It will pop up now on the screen, and I want to add a bit more as well, things that were mentioned during the earnings call. And by the way, for those that did not watch the previous video, a quick recap of what happened in that quarter. Revenue increased 80% year over year. Operating expenses decreased 23%. Operating loss is now so much better, an improvement of 57%. Net loss improved by 42%, and now net loss per share 7 cents instead of 15 cents same quarter last year. Adjusted EBITDA also improved 80% year over year. And so jumping into the earnings call transcript, so they talk here about the cumulative subscription and bookings backlog, which includes our previously reported cumulative bookings backlog to also now include new subscription revenue streams that we are focused on. Cumulative bookings backlog takes into account the prior quarter end balance plus new bookings in the current quarter minus associated revenue recognized. Cumulative bookings backlog is still derived from committed customer contracts, and this definition remains the same as the previous one. Now, subscription backlog takes into account customers where we are the leading or exclusive provider and assumes a 4-year ramp to fully scale with a total 5-year duration. This allows us to combine our Pillar 1 and Pillar 2 businesses into a single unifying metric. Our cumulative bookings backlog mainly represented our Pillar 1 businesses. In Pillar 2, we have previously noted that ARR standardized the annual subscription-like potential of this contract, while also indicating the better stability and predictability building in our financial model. Now, for those that don't know, Pillar 1, Pillar 2 is basically this. There is also Pillar 3. Now, Pillar 1 is the products voice enables product across automotive and consumer electronics, IoT. Number 1 here is royalties based on volume, usage, and life. Revenue per device per user, revenue per device per unit of time. Then you've got Pillar 2, which is services, subscription in this case, so customer service, food ordering, content, appointments, and purchasing opportunities, revenue from usage-based monthly fees, revenue per query, and revenue per month per location. And then Pillar 3, but this is not calculated in that current backlog. Pillar 3 is monetization, so commissions on ordering, intent-based sponsorships, high-value focus targeting, revenue share with customers, replace cost with future revenue. So there you have it. By the way, for those that are new here, first of all, welcome. Second of all, if you want a maybe better explanation of Soundhound AI, I did cover this company in early January. That video will be in top right corner in case you want to check that out. Now, going back to the earnings score, someone actually asked about the duration, right? How do you define duration when it comes to the backlog metric? So it sounds like on the subscription side, you define the duration as the 5-year duration. What's the duration on the booking side, on the side of Pillar 1? That used to be, he believes, 6 years. Is it still 6 years, or are you harmonizing it also 5-year duration? Got an answer here. When you take the weighted average of the full portfolio, it's still about 6.5 years. So I questioned myself in the last video, seeing that for full year 2025, the outlook was $100 million in revenue. I found it weird since the backlog was 600 and something million. But then if you do the calculation and you know that this is the duration, okay, it makes sense. It can obviously also be much higher. Remains to be seen. Then with regards to the acquisition of Sync3, they say they see the acquisition is roughly EBITDA neutral over 2024 and accretive beyond. They got asked more specifically about the locations that Sync3 will provide or will bring in to the business. So an analyst here said, I think they had something like 10,000 locations. Do you feel like you could apply your tech to all locations? Or is there a percent that's already kind of happy with what they have? So there is an opportunity to upsell by offering things like smart answering and employee assist to existing customers, and they're pursuing both of those. There's also an efficiency opportunity for Soundhound as they sort of migrate their backend systems to the cloud system, migrate to our technology, so to Soundhound technology. So it's also sort of backend, not only front end, and that's a cost opportunity for us because they did say that it is going to, let's say, hurt margins in the short term. Last thing here is with regards to the restaurant business, a question about how many units Soundhound are currently deployed in and what they're targeting for the end of the year. Basically, they're going to grow from the 10,000 range by the end of the year quite meaningfully, and then hopefully they'll soon talk about hundreds of thousands that they're in, and the revenue numbers will follow. Of course, this is something to follow quite closely in the coming quarters if those numbers get updated, etc., etc. But if they do on the upside, then that's definitely positive for the stock and for the business. So lastly, the graph here, of course, after that crash on Friday, the stock right now is not overbought anymore. RSI is still pretty high, but at least it's not overbought anymore. If you're interested, the 200-day moving average sits at $2.58. The 50-day one sits at $3.12, and the 20-day moving average at $4.28. As you can also see, previously $4 was short-term, let's say, resistance point right here, and then we've got another big leg up. Previously, we can also say that around $4 or so, that area was a previous resistance, was a previous spot where the stock lingered around for quite a while. I think I'd be very interested if we can reach those areas again, maybe towards that 20-day moving average. Remains to be seen. RSI will obviously be much lower if that happens. Could also never happen. I don't have a crystal ball. This is just my assumptions. If it never happens, then so be it. But that said, I'm definitely keeping a close eye on Soundhound. Of course, do share your thoughts down in the comments below. What have you been doing on Friday? What are your plans in the coming days with regards to this company? Adding, selling, holding, not touching it? Let me know down in the comments below. If you enjoy this type of videos, leave it a thumbs up, subscribe if you have not, and I'll see you all in the next one. Bye bye.